Welcome back to Smart NYSE Investing. If this is your first time here, welcome. On this channel, we simplify investing in the New York Stock Exchange so that even beginners can confidently understand the market. In our previous videos, we have learned how the stock market works, how to analyze a stock, and we have even analyzed Coca-Cola step by step. Today, we are going to analyze one of the world's largest energy companies, ExxonMobil. By the end of this video, you will understand what ExxonMobil does, how it makes money, how the current geopolitical situation is affecting the company, whether it could still be an attractive long-term investment. So let's get started. When most people hear the name ExxonMobil, they think of petrol stations, but that's only a small part of this story. ExxonMobil is one of the largest integrated energy companies. It explores for oil and natural gas, produces them, transports them, refines crude oil into fuels, manufactures chemicals, and sells products worldwide. In simple words, ExxonMobil is involved in almost every stage of the energy business. Think of it this way: if the oil industry were a bakery, ExxonMobil would not just sell bread, it would own the farm, growing the wheat, the flour mill, the bakery, the delivery trucks, and even the shop selling the bread. That's advantage of being an integrated energy company. One of the biggest reasons investors are talking about ExxonMobil today is the ongoing geopolitical tensions in the Middle East. Whenever conflict escalates in this region, investors immediately start watching oil prices. Why? Because the Middle East remains one of the world's most important oil producing regions, and the Strait of Hormuz is one of the busiest oil shipping routes in the world. If markets fear that oil supplies could be disrupted, crude oil prices often rise. Higher oil prices generally improve the earnings potential of companies like ExxonMobil. However, it's important to understand that the stock market does not only react to today's news, it reacts to expectations about tomorrow. That's why you will sometimes see oil prices rising when ExxonMobil moves very little or even falls temporarily. The market is always looking ahead. Let's look at some real numbers. ExxonMobil generated approximately $332 billion in revenue during 2025. Although this was slightly lower than the previous year because oil prices softened, the company still earned $29 billion in net profit. Just think about that. That's nearly $79 million in profit every single day. While many companies struggle to remain profitable during uncertain times, ExxonMobil continues to generate enormous cash flows. That's only reason institutional investors continue to follow this company closely. Many beginners focus only on revenue. Professional investors usually focus on cash flow. Why? Because cash pays the bills. In 2025, ExxonMobil generated approximately $52 billion in operating cash flow and over $26 billion in free cash flow. This cash allows the company to pay dividend, invest in new projects, reduce debt, buy back its own shares. Cash flow is like oxygen. You don't notice it until it's missing. Another encouraging sign is production. ExxonMobil is expanding output from low cost projects such as Guyana and the Permian Basin. These projects produce oil at relatively low cost, meaning the company can remain profitable even if oil prices decline. That's a huge competitive advantage. Not every oil company can say that. If you are looking for dividend income, ExxonMobil has built a strong reputation over many decades. The company has consistently rewarded shareholders through dividends and share buybacks. During 2025 alone, it returned more than $37 billion to shareholders. Imagine owning a business that not only grows but also regularly sends you part of its profits. That's one reason many long term investors like companies such as ExxonMobil. This is probably the question many of you have been waiting for. The ongoing conflicts in the Middle East have increased uncertainty in global energy markets. Whenever tension rises, investors become concerned about possible disruptions to oil supplies. If oil prices remain elevated for a prolonged period, companies like ExxonMobil may benefit through stronger revenues and improved cash flows. However, investing is never that simple. Higher oil prices can also slow global economic growth. If businesses and consumers reduce fuel consumption because prices become too high, energy demand may eventually weaken. So, while geopolitical tensions can create opportunities, they can also increase market volatility. That's why successful investors don't rely only on headlines. They focus on strong businesses that can perform under different market conditions. Now let's talk about future. No one, not me, not Wall Street, not even the CEO of ExxonMobil knows exactly where the stock price will be at the end of this year. Anyone who claims otherwise is probably trying to sell you something. What we can do is look at possible scenarios. If oil prices remain relatively high because geopolitical tensions continue, ExxonMobil could deliver stronger earnings than expected. If tension ease and oil prices decline, earnings could moderate. This is why analysts publish ranges instead of guarantees. The key takeaway is this: ExxonMobil remains a financially strong company, but its short term performance will continue to be influenced by oil prices and global events. When I analyze ExxonMobil, here's what I see: strong global business, consistent profitability, excellent cash generation, attractive dividend history, low cost production projects. The biggest risk: oil prices. If oil prices fall sharply, earnings may decline. But because ExxonMobil is one of the world's lowest cost producers, it is generally better positioned than many of its competitors. So, would I consider ExxonMobil a company worth studying? Absolutely. Not because it's guaranteed to make you rich overnight, but because it is one of the most important lessons in investing. Great businesses don't always have exciting stories. Sometimes they simply generate billions of dollars year after year while quietly rewarding patient shareholders. And here's one last thought. People often ask me, should I buy ExxonMobil because of the war? I usually reply, buying a stock only because of a headline is like buying an umbrella. After you are already soaked. Successful investors don't invest based only on today's news. They invest in businesses that they believe will continue creating values for years to come. Disclaimer: this video is for educational purposes only and should not be considered financial advice or a recommendation to buy or sell any security. Always conduct your own research and consult a qualified financial advisor before making investment decisions. If you enjoyed this analysis, don't forget to like, subscribe, and share this video. In our next episode, we will analyze another NYSE company step by step and continue building our investing knowledge together. Thank you for watching, and I will see you in the next video.